Okay, good day, guys. Good day. Today I want to talk about how to trade boom and crash. So I'll start on boom 500. The way I trade boom and crash is the simplest way ever because I don't follow spikes on 1 minute, but I trade boom and crash as a normal market. So what I do first when I go to boom and crash, I only go to 2 hour chart to see the market direction. Then I'll go to a 30 minutes chart. So this is what I do on boom and crash every day. So this is boom 500. So the trick is, guys, when we say boom, we buy. Then when we say crash, we sell. So this is boom 500. We only look for buys. We don't look for sells or anything. So as we can see, boom 500, it is bullish on a higher time frame. We've been bullish on this bullish channel for a long time. So this means we only look for buys because it's a boom. So if you go to crash, you will notice crash on a higher time frame, it is bearish. So there is no point of you going on a daily time frame on crash because you will notice it is just bearish because it is crashing. The market is crashing. Okay, so I go on a 30 minutes time frame right now. Switch to a 30 minutes time frame. So the biggest or the most of my analysis I do them on a 30 minutes time frame. So let's pick a point where we can start. Okay, I think we can start here. I think we can start here. We want to analyze this market. We want to analyze this market. So if you look at this on this point, this market was bearish from this point. So from this point, we were bearish, creating a series of lower highs, lower low, lower highs, lower low, lower high, and lower low. Uh, uh, okay, lower high, lower high. Then we created this lower low. So when you create this last lower low, what you do on 30 minutes, you look on your left, on your far left. Always when boom or crash have a reversal, you must have an old order block, an old order block lying there. So whenever we leave an order block on boom and crash, you know the market will come and react to that on that order block. If you realize correctly, on this market, we had the market structure shift. Then we had our market returning to an OTE level, this OTE level, then go buying to the top. But you realize we didn't test this order block at the far end. So if you see a boom and crash coming to fill in a fair value gap most of the times here, then leaves an order block at the bottom, you know the market will target that order block. When the market reverses, it will come for that order block. So looking at this, this was our last this was our last high. Then the market came. We had a stop band here. We had a stop hunt at this point. Then most of the times when the market doesn't break this high, but only have a stop hunt, you know the market will target the last low. This will become liquidity. This will become liquidity. That's why the market targeted this low as liquidity. So when we took out this low at this point, you know we are reacting because we failed to come to this order block. So we came in, we reacted on this order block, taking out this liquidity point. Let me mark it. This is this liquidity point here. Then the market reverses to the top. So what we discussed on is for boom, we buy, only look for buys. So on a 30 minutes time frame, I want to see an impulsive move to the top. So for example, what I want to see is an impulsive move to the top, then market retracing to an OTE level, then I'll buy on this area. That is what I want to see on boom and crash. So I want to see an impulsive move to the top, then a retracement, then to an OTE level, fib level, then I buy. So in this OTE level, what I will look for is either an order block in this area or a fair value gap or an extreme order block, then I buy. So for crash, same thing. I want to see an impulsive move going downwards, then a retracement to an OTE level, then sell. So at this area, I want to see a fair value gap in this area, then on top, an order block. Then this is a strong zone for me. So looking at this market right now, uh, let's say we move the market forward a little bit. We are back testing. What I want to see is a full retracement. Okay, what I want to see is a full retracement because this is an impulsive move to the top here. So what I want to see is this market coming into this OTE zone, reacting to this OTE zone, say that this order block or beneath fair value gap. Remember, we have an extreme order block down here. So I want my market to come to these areas. Then I'm ready to buy when the market reaches this area. Then the market doesn't come to your OTE level. This is common on crash and boom. The next thing you need to know is this market likes this setup here, which we call a stop hunt. So what happens on a stop hunt, you realize this is a retracement, then the market will just shoot up. Then if you look on the left, there is a higher low, a higher low, which was created when the market was going up. Then there's an order block at the top. So the market will just create a stop hunt. So what you do in this case, when the market does this, you wait for the market to come down, go in, then you buy. You buy here, put your stop loss beneath, then you target this high. So what I will do in this case, this will be my first. This market came down here. So this will be my first trade of that day. I buy, put my stop loss beneath, I target this high. You don't target this high, you target the next high because underneath we still have an OTE level, so you don't target. So let the market move. You have collected your first trade. You realize this market went up, We didn't what? Didn't create a new higher high, but we just had a stop hunt. So, which means this low is now liquidity in the market. We are expecting this market to come and take out this low. We expect the market to come and take out this low and react to our OTE level. So we move the market, we move the market. Look at what happens in this area. We took out this low, then reacted to this order block, to this OTE level. There's an order block, there's a fair value gap. So what happens when the market does this? I'll buy, this is boom. So I'm buying, targeting this high. I'm not targeting this high. I'm just targeting the next high. Then I'll move. Then the market moves, plays a bit, 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 or plays a bit, plays a bit, plays a bit. Then our TP is hit. So I don't want this video to be long. This is how I trade boom and crash. I buy on boom, I sell on crash. Then I will send you another video. I will do another video trading crash, showing you how I trade crash. So to recap, you need to have a break of market structure in a 30-minute. So first you need an impulsive move to the top because it's boom. Then you wait for a retracement. First inducement, you buy on the stop and you target the high. That's your first trade. This trade became a 1:3 risk to reward ratio. Then your second trade became 1:3 risk to reward ratio. If you adjust this correctly, 1:3. So you have made 6 RR. 6 RR on trading crash and boom. You realize if you wanted, you just still hold this trade to this area. So if you had the guts, you've gotten 7.5 RR. So that's how I trade crash and boom. So thank you for your support. See you next time.